Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is the 3rd of May, and we're starting from euro-dollar pair with Jakub Novak. First, let's have a look on 5-minute chart for analyzing yesterday's transactions. Euro tested the level of 1.0979 when the MACD indicator line was just beginning to move downward, which was a good signal to sell. This resulted in a price decrease of around 30 pips. No other market signal appeared for the rest of the day. Actions. Inflation data in the euro area came out mixed Inflation data in the euro area came out mixed, as on the one hand, the overall figure increased, while on the other hand, core prices dipped slightly. This kind of report is clearly not enough for the European Central Bank to decide to stop raising rates. Today, a report on the unemployment rate in the Eurozone is expected, but it will not be of any interest to traders. More interesting and important statistics lie ahead. The US is scheduled to release an unemployment report from ADP, as well as business activity data in the service sector from ISM. Growth in these indicators will not give the Fed a chance to consider a softer policy in the future. Therefore, rates are likely to continue increasing, which will be in favor of dollar. That will also lead to a collapse in euro. For long positions, buy euro when the level of 1.1039 is reached, and then take profit at the price of 1.1086. Growth will be seen if there is a very good unemployment data in the Eurozone. However, before buying, traders should make sure that the MACD line is above zero, or is starting to rise from it. Euro can also be bought after 2 consecutive tests of 1.1008. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.1039 and 1.1086. For short positions, sell euro when the level of 1.1008 is reached, and then take profit at the price of 1.0959. Pressure will return only in the afternoon after the Fed's decision. However, make sure that before selling, the MACD line is below zero, or is starting to move down from it. Euro can also be sold after 2 consecutive price tests of 1.1039. But the MACD line should be in an overbought area, as only by that will the market reverse to 1.1008 and 1.0959. What about cross pairs? Here's Euro GBY pair with area of Mockmore. Let's have a look. On the weekly chart, the Euro GBY currency pair seems to be moving in a bullish bias, which is marked by price movements moving in a pitchfork channel, which is swooping up. However, after successfully testing the middle line of the weekly pitchfork, accompanied by the appearance of deviations between the price movements, and the MACD indicator, there's a possibility that Euro GPY in the next few weeks will be corrected downwards to test the 138.78 level. If this level is successfully broken, Euro GPY will have the opportunity to continue its downward correction up to the bottom line of the bullish pitchfork channel. But all of these scenarios could fail if, on the way down suddenly, there is an upward movement back to its initial bias, especially if it manages to break above 151.56 level. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitris Tsoupas. Early in the European session, gold is trading around 2017, around the top of the downtrend channel formed since April 12, and above the 21 SMA and 200 EMA. We can see a strong uptrend, but it's showing signs of exhaustion, and a technical correction is likely to occur before the instrument continues its bullish cycle. During the American session, the US interest rate decision will be announced. This announcement will generate strong volatility in gold, and the price could reach levels of $2,000 and $2,031 as immediate support and resistance. Since April 14, gold has been forming a pattern of symmetrical triangle. This pattern was broken yesterday in the American session, and a technical correction is likely to unfold towards the top of this pattern, which now becomes support around 20.05. Then the metal will resume its bullish cycle. On the other hand, in case there is a sharp break above 2020, it's likely that gold will continue to rise and can cover a gap that it left around 2023. If the bullish force prevails, the instrument could carry on with its rise and reach 88 Muri, located at 2031. In case gold finds rejection around 2031, we could expect this area to act as a key point to sell. If this scenario happens, we should bear in mind overbought market conditions, so a technical correction towards the psychological level of $2,000 could occur. In case gold falls from current price levels below 2020, it could reach the daily pivot point located at 2004. A daily close below this level could be a clear signal to resume selling, and the instrument could reach 1987, the 21 SMA, and 1974, the 200 EMA. And finally, here's Laurie Bailey with USD GPY pair forecast. The USD GPY did not reach the 138.40 price channel line. Yesterday's speculative rise in counter-dollar currencies prevented it from doing so. In the main scenario, we believe the USD will get stronger once the Federal Reserve announces its monetary policy. Up to that moment, the price can easily reach the support of 135.40. Further, we're waiting for one more wave of growth to 138.40. Overcoming of the resistance will open the target at 139.40. Above it, there's another target at 140.35. If it fails to reach the support level of 135.40, the price will try to push through 134.40 as well. On the 4-hour chart, the Marlin oscillator, which has already entered the area of the downtrend, helps the price reach the target of 135.40. The 135.40 coincides with the MACD indicator line, which supports it. This circumstance indirectly supports the development of the main bullish scenario. The market will make its final decision at today's Fed meeting. That's all for today. See you online soon. Good luck.